Hello and welcome to the Global View on this Monday. I'm Andrew Gagan. Great, you can join us again here at AusBiz. Let's get across what we have seen on Friday, but also, of course, what we saw on the weekend. Now, global markets were mixed to end last week ahead of US-Iran ceasefire talks over the weekend, those talks ending without any agreement. And President Trump subsequently saying the US Navy would begin blockading the Strait of Hormuz, Iran responding by warning that military vessels approaching the strait will be considered a breach of the ceasefire and would be dealt with harshly. So on Wall Street, the Dow and S&P fell on Friday, led lower by the consumer staples, while tech stocks boosted the Nasdaq. And for the week, the S&P added more than 3.5%, the Dow was up 3%, and the Nasdaq rallied 4.7%. Stocks specifically, Broadcom rose on a long-term deal to develop Google's custom AI chips. Nvidia also advancing. US-listed shares of Taiwan Semiconductor, the world's largest contract chip maker, rose after it beat first quarter revenue forecasts. CoreWeave surged following its announcement of a multi-year agreement with Anthropic. Financial stocks underperformed ahead of major US banks posting earnings results this week, marking the unofficial start the first quarter reporting season. Analysts currently predicting aggregate year-on-year S&P 500 earnings growth of 13.9%. That's according to LSEG. And locally, Morgan Stanley has slashed the valuation of major Australian listed tech stocks, warning that investors had not properly priced in the risks that AI had created, specifically downgrading the share price of accounting software developer Xero by around 40%, data analytics firm Nuix, share price target there slashed by 33%, and medical imaging firm Pro Medicus cut by 27%. Well, the first direct US-Iranian meeting in more than a decade and the highest level discussions since the 1979 Islamic Revolution have ended with no agreement, although President Trump said he believed Iran would continue to negotiate. Following the talks, he said the US Navy would start blockading the Strait of Hormuz from today to be enforced against vessels of all nations entering or departing Iranian ports and coastal areas. And Iran has threatened to take action against any foreign military vessel approaching the strait. Meanwhile, Hungary's far-right populist leader Viktor Orban has conceded defeat after a landslide election victory by the opposition TISA party, which has advocated closer ties to Europe. Orban has been in power for 16 years and is seen as an ally of both Russia and US President Donald Trump's administration. Well, US inflation rose 0.9% month on month in March for an annualised rate of 3.3%. US Treasury yields rising on that data, with 2 years up to 3.8%, the 10-year yield at 4.32. Australian 3-year government bond yields rose to 4.7%, the 10-year up to close to 5.03%. The US dollar jumped against other major currencies following the US-Iran talks, with investors seeking the relative safety of the currency on continued geopolitical uncertainty. The Aussie is trading at 70.2 US cents. Well, the US plan to blockade the Strait of Hormuz is estimated to hold nearly 2 million barrels a day of Iranian oil that has been passing through the waterway. Crude futures hovered around $100 a barrel as the attacks continued and that meeting unfolded over the weekend between the US and Iran. So Brent crude currently sitting at around $95 a barrel, It fell around 13% last week. Gold held steady. Well, there we can see the Brent crude. Let's move to gold. Held steady on Friday, currently trading at around $4,745 an ounce. Copper up more than 2%, and iron ore little change to 106 US a ton. Bitcoin is currently trading. There's the copper chart. Let's move to Bitcoin, and it is currently trading just under 71,000 US dollars. Okay, let's get across those market moves globally. Also with the focus on New Zealand, Matthew Goodson joining us from Salt Funds Management. Matthew, welcome back. Happy Monday to you. Not so happy though, just in terms of those geopolitical developments, obviously with no agreement whatsoever between the US and Iran. Perhaps that was to be expected given how far apart the two sides are. Let's first begin with how you've opened there in New Zealand.
Yeah, I mean, the main news this morning is clearly this announced US blockade of Iranian ports or oil originating at them or ships going to them. So live time now, Brent's up about 9%, almost $104 a barrel, and S&P futures are trading down about 1.2%. So that's really weighed on our market on the open. We're down about 1.1% at the moment. So I know that's the major news, but also A2 Milk, which is a heavyweight in our index, has delivered a surprise earnings warning after it responded very strongly to a slight result beat back in February. And this morning they've warned, based on supply costs and also delays in their supply chain due to significantly expanded testing requirements, given issues that other infant formula companies have had in the Chinese market. So, when you trade on a PE in the mid-30s, there really is nowhere to hide when you have a warning like that. So the stock's down about 14% at the moment.
And in fact, another dual-listed company in focus is Xero. Matthew, I don't know whether you got across that re-rating there from Morgan Stanley in terms of tech stocks locally here and obviously in New Zealand there, given the AI disruption. What are you seeing with Xero at the moment?
Well, interesting to come out with a view now that it's fallen 60% from its highs. Look, I think the big debate in AI at the moment, and it's moved on to a slightly more nuanced debate, is the traditional software company simply middleware, if you like, that can easily be replaced by AI, or does it have its own unique distribution, its own unique data sources and brand name, which make it very difficult to replace? So I think the market, rather than just, now that everything's fallen so hard, the market's just starting to catch a breath in some of these names and try to pick through them in a slightly more nuanced way. But what's happened is, at the peak, they had remarkable long-term expectations priced in of growth forever. And I think it's that growth forever expectation that has now fallen out of them all.
Matthew, overall, how are you positioning there at Salt Funds, given that ongoing geopolitical uncertainty, but clearly with the focus there on New Zealand, and perhaps also bearing in mind monetary policy and where that's likely to go given the inflationary effects of those fuel prices?
Oh, indeed. Look, the Reserve Bank here is trying to look through the fuel price increases, and we do have spare capacity in our economy, unlike the Australian economy, which has been running hot and may actually require further rate hikes. That said, while we're keeping our cash target at 2.25%, the market's already done a lot of the tightening for the Reserve Bank. So, for example, our critical 3-year swap rate is at around 3.7, 3.8%. That's up over 100 points from where it was late last year. So, in effect, the market has already done a lot of the tightening work, and the cash rates started to, I think, lose a little bit of relevance. In our economy, firms tend to have 2-3 year fixed rates on their business borrowing, and a lot of households have 2 to 3 year fixed mortgages. So it really is just a little bit further down the curve that matters. And in terms of our positioning, look, the economy was starting to climb back beautifully in January and February. All the leading indicators were starting to point up nicely. And this, no bones about it, this is a stagflationary supply shock, although partially offset by our rural sector. While their costs will rise from this, certainly the prices for dairy and red meat are going to only be going up further given the same cost pressures globally.
Yeah, because this is the deal that central banks are sort of trying to get their heads around at the moment, isn't it? That stagflationary outlook, given particularly what we're seeing with those fuel prices. But you say the data looking good in terms of the New Zealand economy, but what's the expectation in sort of the next 6 months if this crisis continues?
Oh, look, the very latest data has shown that people are closing up their wallets very quickly. So if this gets solved quickly, I suspect that will change. But for now, I think aside from a sudden boom in demand for electric vehicles, we've seen a very rapid retracement in investment and consumption intentions, and I think that's something you'll see globally as well.
Matthew, great to get across what you've seen there at Salt Funds Management. Thanks so much for joining us.
Pleasure. Thank you.
Now let's turn our attention to the local market ahead of the open. Matthew, they're telling us, US futures down 1.2%. This is in the wake of those talks that essentially went nowhere over the weekend between Iran and the US. Now, that's a glimpse of the S&P ASX 200 futures, 0.8% higher. However, that was where they ended on Friday. So let's wait till they begin trading again, because expectations that we are going to begin significantly lower to get this trading week underway. And we'll get right across that in just a moment with the Open. Stay with us.